Hey guys, welcome to the Legacy Wealth Show. Tim Bratz here, and really excited about who I have today, Miss Kelly Stumphauzer. Welcome, Kelly. How are you?
Good, Tim. Thanks for having me.
Super pumped to have you on. So I'll give everybody a little bit of background, but I really want you to dive into your background. But Kelly and I have known each other for several years now, and very successful turnkey operator out of the Cleveland marketplace. I was doing turnkey a few years back as well, and ran into each other back then. Also started a management company. I had the management company. Kelly has since then taken that over, and Kelly's been both growing her turnkey business and at the same time started building her own wealth through apartment acquisitions over the course of the past, 12 months now, and having a lot of success there, building up to several hundred units. And you did about 130 houses last year on the turnkey side. You'll do almost 200 this year, right? In addition to picking up over 300 units in the past 12 months on the apartment side as well, right?
Yeah, I'm a little busy.
Super busy. So I'm excited to share your story. I think you have a very powerful story, very powerful and impactful for our women listeners too. And I love that you bring that to the table. So why don't we, everybody knows where you are now. Let's go back to the beginning. Let's go back to how you got started, why you got started in real estate, what that journey has looked like for you, and come up to today. And I'm sure we're going to have some really good questions and dialogue as we go along here. So, Kelly, tell me about how you got started.
Sure. So that dates all the way back to 2002, actually. I was a in pharmaceutical sales. And became a mother to a little newborn that I didn't want to leave at home. And so I decided to stay at home, but I should have known that that wasn't a perfect match for a type A personality. So it wasn't too long before I was a little bit bored and was looking for some mental stimulation. And I'd always had an interest in real estate, specifically the investment side. So I actually just answered an ad in the newspaper. There was an investor who was looking for a bird dog. And I wasn't really interested in being paid for my services. I just wanted to learn what he knew. And so I used to drive for dollars. I put my daughter in the backseat of my car, and I would borrow his Ron LeGrand CDs and drive around and look at distressed properties. And I kind of taught myself from the ground up. So that was 2002 till about 2004. In 2004, I started buying my own rentals. And by about 2006, I was flipping houses. And I can remember back then, I was a do-it-yourselfer. By then, I had 2 children. And my daughter was sitting on the floor on a blanket in one of these old abandoned houses playing with toys. And by then, I had a son who was in a car seat. And I was up on countertops, like caulking and painting, and flipped my first couple of houses that way. Learned a little bit about wholesaling, seller finance, you name it. And then I had my third child. So I had 3 kids in about 5.5 years. And unfortunately,
that's a full time.
what's that?
I can imagine having 3 kids. I have 2 kids right now, and it's unbelievable how much work it is. I can't imagine having 3 and raising them and flipping houses at the same time.
So by the time I had my third, I really was very much, part-time. I was just doing this as a hobby. I mean, I had a passion for it, but it was very part-time. Obviously, you know how intensive those ages are. And so parenting was first. And by the time I had my third, it was, a very small portion of my time that I was dedicating toward it. But unfortunately, in 2010, I found myself in the middle of a divorce. So I have these 3 little kids. And it's been a number of years since I've been out of corporate America. And admittedly, I don't make a good employee for anyone anyway. So I wasn't interested in going back and working for someone else. So I'm like, I've got to take this hobby. I've got to turn it into a career. I've got to be able to support myself and my children. So I decided to get my real estate license. And I realized at that time I was a bit of an anomaly for a real estate agent. I mean, I was an investor first, but I understood what investors were looking for. Obviously, I knew how to analyze a deal. I knew creative finance options. I knew how to quote Rehab, et cetera. And so I went to work actually procuring properties for investors. And by that time, we were 2010, 2011, as you know, here in Cleveland, the market had really taken a beating. We were picking up houses for 20 cents on the dollar. So most of the investors that I was buying properties for were international folks. And I bet I acquired 100 to 200 properties a year, both for mom and pop investors and for the hedge funds.
That was all wholesaling?
No, that was an agency as a buyer's agent. Yeah, I wasn't doing any wholesaling by the time I had my real estate license. So I worked with a contractor in town using the Burr Strategy, for those that are familiar with the Burr Strategy.
Explain what Burr is.
Yeah, it's buy, rehab, rent, refinance. So that's where the investor buys direct. It's different from the turnkey model. So the investor is buying the property directly. They're contracting and paying for the rehab work. You help them get the property rented out, and then hopefully, back then the banks weren't really lending, but ultimately the goal is to then refinance it, pull your capital back out. So we worked that model for a couple years, and that contractor ended up imploding. And then actually one of my clients from California came to me and they said, look, we need someone to do turnkey here in Cleveland. There's a huge demand for it. We need someone we can trust. We think you're that person. You ran a turnkey company. I knew the responsibility and the liability that came with that. So I thought long and hard about it. I mean, at this point, my children are all school age, but I knew what it was going to require of me. And part of that was the management portion. You really cannot be a successful turnkey operator without strong management in the background. So I got them to agree to allow me to do third-party management. Started my company in end of 2014. And to my knowledge, I'm one of the bigger turnkey operators in the Cleveland market.
Actually, in the country.
Yeah, maybe. That's crazy to think. Definitely one of the larger female operators in the country, that's for sure. But yeah, I've got two different companies. One is Prosper Cleveland, which I'm sole owner of. The other is Limitless Turnkey, which I have by way of a partnership. Prosper is mostly single family and in really good markets in and around Cuyahoga. And then Limitless is 2 to 4 families. And that's primarily driven out of the Cleveland market, but we're in several other areas in the Midwest. So yeah, between the two companies, probably 250, I would say, this year. It's a big undertaking. Yeah.
Wow. So I a lot to unpack there, but from a standpoint of growing that piece and growing that business, tell me a little bit about what that transition looked like. So you're going and you're brokering houses. As you're brokering houses, a couple people come to you and say, hey, will you find me some deals? And by the way, Kelly, will you oversee the rehab? I assume that's kind of how it went. And then you had some contractors. Most contractors good at swinging a hammer, not good at the business side. So then somebody like you comes along, gives them so much business, and they implode. It happened to me multiple times with multiple contractors. I'm still learning my lesson here. And then eventually they're like, hey, we need management services. And you refer off to a couple management companies. They get paid opposite of the owner. They get paid when the property's vacant, when it needs to be leased, when it needs to be renovated, and all those kinds of things, versus the owner gets paid when it's occupied and stabilized and not being renovated, not losing money, right? And so a lot of times the management company is not congruent with the vision of the owner. So it got to a point where I know you and I had a conversation where you kind of took over my management company and are one of the larger property management companies in Cleveland as well now. And so what did that growth look like? What were some of the biggest hurdles that you faced during that? And how did you start building up a team? Who was your first hire? How did you go through that process in order to build your team up in order to really, get you out of swinging the hammer and caulking and painting and stuff on your own, and then eventually really being the business owner and the strategist to build it up that way?
Yeah. Well, I mean, a lot of it I knew, unfortunately, from my negative experiences, as with anything, that's where we learn our biggest lesson. So it's kind of like I came into it knowing everything not to do, not necessarily what to do, but that was a big benefit to me. My first hire was my transaction coordinator. I was pumping so many deals through for years that I needed that person. I just couldn't possibly handle all my contracts. But I knew there was going to be such a big demand on the turnkey side that the first thing I did, instead of bringing construction in-house and having contractors as employees, is I leveraged through general contractors. So I created product specs and scopes that would be standardized across all of my properties. And I worked with general contractors. And then I hired a project manager who would actually serve as the intermediary between my company and the general contractors. And each one of those general contractors at that time had their own capacity. One guy could maybe handle 2 houses at a time. The other could maybe do, 5, 6 at a time. And that's basically what I did is initially anyway, I leveraged the general contractors.
I love that. And I love that instead of having to take on the overhead and take on the liability and take on the responsibility of keeping these people busy, you're able to kind of, find fractional employees or find part-time or find people with their own business and then hire them on a job-by-job basis. And then as you grew, they could grow with you. But it didn't take on that responsibility and liability and headache for you in-house. So from a standpoint of bringing those people in and then continuing to build your business, what did it look like then as you brought on a partner to do the bigger deals and to do more deals? And as you continue to grow, you took those revenue generating activities. You're still focused on a lot of those and dealing with more clients right now, right? More on the disposition side and that kind of thing. And then also creating the vision of, here's what our standard processes look like and really being the CEO of this whole thing. So you have a project manager, do you have acquisitions or are you still handling acquisitions?
I now have acquisitions. As I've moved into multifamily investing, I've brought acquisitions in. It's hard for me to take my hand off of that. But just having been in the business for so long, I'm in a unique spot. A lot of people come to me with deals, whether they're on market or off market. I'm usually drinking from the fire hose of deals. So I had to take it through created an acquisitions team to think like me and take over for me so that we could capture on the good deals and I could just take myself out of it as much as possible. Yeah. I mean, right now I'm in the process of automating as much as I possibly can.
And part of that is putting checklists in place, right? Making sure that there's standard procedures and standard operating procedures for every role. 2 is standardizing, which I love what you said earlier, is like you can go to a house on the east side, on the west side, on the south side, and go into the living room, spin around a few times. They all look exactly the same. You wouldn't know where you are because they all look exactly the same. You have the same standard finishes, which then gives you scale to buy more paint or buy paint at a reduced price, buy flooring at a reduced price, buy fixtures at a reduced price because you're putting the same stuff into every single one of them. And it rents. It rents quickly. It rents well. It attracts quality tenants. It usually hardens the property. So ongoing maintenance is going to be minimal and it's going to create better returns for your investors. And all of that is part of scaling the business. You have to put this kind of stuff in place in order to do 250 deals a year like you're going to.
Yeah, so we had to have standards. Otherwise, our contractors would have been making those decisions for themselves, and you don't want that to happen, especially if they're making their money based off of the rehab amount or what they can save for that matter. And then, as you mentioned, standardization is key for scale, but it also, as you mentioned, it helps our investors both from a maintenance standpoint and then, of course, for unit turns. It's pretty simple for the management company. They know what paint colors on my walls. They know what vinyl plank flooring I'm using. They know where it's coming from.
So I love that. And what's cool is like when you're flipping retail houses, the HGTV kind of stuff, every single house has its own scope, has its own finishes. It's all customized. You can't scale that. Like the stuff that they show on HGTV is not, it looks good for TV, but it's not real business. You don't make money doing that stuff. And I think a lot of people who get into real estate do that because they want to flip houses. And the business owners like you and me realize there's not real money in that. You can't build a real business around doing that. And that's why you get into the turnkey space or owning your own rentals. And so what I want to kind of pivot to a little bit is talking about you have created a ton of wealth for all of your clients, right? And somewhere along the way, you're like, when am I going to create my own wealth? Yeah, you're making a lot of money, but you're not creating wealth in the transactional flipping of turnkey houses, right? So that's a massive revenue stream for you. And as you continue to grow that, you're working on automating that process and systematizing and putting the right people in place to run that business. So that way you can continue really begin to grow your own wealth as well. And so what is that mindset shift? And let's talk about the mindset shift first, and then let's talk about the physical pivot of automating your current business and then starting to acquire apartment buildings. You came out to Commercial Empire in August of last year. So it's been about a year. You own how many units right now? 160?
Yeah, but we have several more buildings.
150, 200 units or something in the pipeline.
I'm hoping to end the year at around 500 or 600 units.
500 or 600 units in 15, 16 months.
Yeah.
Unbelievable, right? That's amazing. So what has it been like, and what have been some of the struggles, right? What was the mindset shift? What's the mindset shift for your team? And then from an operational standpoint, what has that pivot been like to put things in place to automate your current business? And then, so that way you can really start working on growing your own wealth by your own holdings as well.
Well, I have you to thank for a lot of that, obviously. To think back, I started off understanding the basic tenets of real estate investing. I can remember playing Kiyosaki's cash flow game. It was like, it hit me like a ton of bricks. This is what I need to do. I need to create passive wealth for myself. And then, next thing I know, I'm just so immersed in this transactional income game, which is turnkey. And as you mentioned, it's a very lucrative business, but it requires a ton of time and attention and liability. And a lot of people have this misconception of turnkey in that it's a problem-free property. So in many respects, on behalf of your client, it's like you're forever tied to it, right? So I found myself pretty overwhelmed by it. And you may or may not recall, it was one of the times we met for coffee, and I was lamenting to you about turnkey, and you were talking to me about your transition over into commercial. I think we were actually meeting, talking about the management company. And you were sharing with me your philosophy about, it was kind of like, I always say this, like, I love when a been there, done that becomes a you can too. Mm-hmm. So that's kind of how you were coming at it. Like, hey, I've been there. I've been in the turnkey space. I know what it's like. I know how time intensive it is. Add a couple zeros and you're on the commercial side. Mm-hmm. But take 20 houses spread across 2 counties, or you can put them underneath one roof, and it's basically the same thing. Whether you're analyzing, you're financing, you're rehabbing, you're tenanting it, you're repositioning it, it's the same thing. However, on the back end, I'm usually selling, and by the way, I create a ton of tax exposure for myself, as you know. Mm-hmm. And you're just basically preaching the basic tenets, and that was the mind shift for me. It was like, I knew something had to change. I knew I had to free myself up so that I could invest in myself first. I just didn't know what that was going to look like, honestly, until that conversation with you. Mm. And I left with the mindset shift, but I still had the question of how. I didn't understand how to analyze it, and I didn't understand how to finance it. Mm-hmm. And lo and behold, I want to say it was maybe 60 or 90 days later, you reached out to me, and it had to have been your first commercial empire, or pretty darn close to.
That was the first one.
It was the first one. So I made the investment, obviously. I've been to other educational events, not many, but some. And I will tell you, I was very appreciative of how you conduct yours. I'm so accustomed to the presenter standing up there with the slideshow, mm-hmm. next to a Ferrari, and the Zig Ziglar quotes and the clapping and whatever. Like, I just thought yours was so meat and potatoes. And I was in there for 2 reasons. Teach me how to analyze it, teach me how to finance it, and I'll go. So went through your class. Within, I want to say 45 days, I had a 6-unit under contract. So I started very, very small. It was perfect acquisition for me. It was about a quarter of a mile away from my office. It was in a market that I knew really well. I was able to use one of my private lenders that I used on the turnkey side to finance it, and repositioned really the whole building. We had to go in and do full tenant turns and rehabs, and it's actually under contract to sell right now. So I'm spinning off and selling the smaller stuff. Mm-hmm. At this point, I had intended to keep it, but I can tell you, like, I will make more selling that building than I will selling 10 turnkey properties.
I love it. And by the way, this is not a commercial to come out to Commercial Empire, right?
No,
I never asked you to say anything, but I really do appreciate that. And that's what feeds the soul, that being able to help people kind of get out of that transactional side of things, not necessarily get out of it, because I know you're still maintaining that business and running it and automating it because it's a great cash flow generator, and then gives you some cash to go and roll into some apartment buildings and start building that long-term wealth that you're doing. But man, like that, I love that kind of stuff. So it really makes me feel good. And another one big takeaway from your story there is you don't have to go out and get like a 100-unit building right away. You can start out with a 6-unit. My first building was an 8-unit, and then I bought another 8-unit, and then I bought a 14-unit, and then I bought a 23-unit, and it just kind of compounds. And eventually you're like, oh man, I got 150 units that I own, and that are cash flowing. And then absolutely, it's always, hey, I want to buy this property and hold on to it forever. And that's how I usually look at every single building that I buy. The reality is, sometimes the market dictates that you should sell. And being a good business owner, as you are, Kelly, you're seeing a 6-unit that was a great investment, would be a great long-term hold. But at the same time, if you can sell that, maybe 1031 the proceeds into something bigger. I know that one's in a good area already, but into a 40-unit building, guess what? Now you're able to kick the can from the tax standpoint down the road. And what I think a lot of people don't realize about real estate and taxes is that, like, since the dawn of civilization, wealth has been measured in land ownership. And so when you think about who writes the tax laws and who creates these, it's landowners, right? And so the best tax advantages are created for people like you and me who are owning land long term. So you got things like tax-free refinance proceeds. You got things like depreciation that offset majority of the cash flow from these properties. You have things like accelerated depreciation and cost segregation studies that take, the depreciation schedule and fast track it. And you can expedite a lot of those things in the first 5, 6, 7, 10 years of the property versus over 30 or 40 years. You have a 1031 exchange where when you sell a property, as long as you roll that money back into another type of property or another like kind asset, you don't pay any taxes on what that gain looks like, and until you sell whatever the property is down the road. And so that is how real wealth can be created, and why it's created so easily through real estate, because the tax advantages that it allows us to have access to. So that's powerful stuff. And even if you are on the transactional side of flipping an apartment building, you can still take advantage of the taxes as long as you roll it into another deal. Or if you flip it over the course of 12 months, right. 12 months and a day, it's long-term capital gains versus short-term capital gains, which is taxed at your earned income tax bracket, right? So now you're paying 20% instead of 50% for where you are. So powerful stuff. And that's one of the things. It's, when we talk about building legacy wealth, I always think it comes in 3 phases. 1 is making money, which you're obviously very good at. 2 is keeping money, and that's where real estate comes in from a tax advantage standpoint. And then 3 is making your money make more money, which is buying these income producing type of assets. So another thing I want to unpack from what you just said is you utilize the same investors and same passive lenders that invest that loaned you money on the residential side, and then just kind of pivoted them into, hey, by the way, you can lend me money on a commercial property, right? Whether that was a debt piece or maybe as an equity investor into the project and kind of like a joint venture type of thing. Like, these people are investing with you to make a return on their investment. They don't care if it's a single family home, if it's a 4-unit complex, or if it's a 40-unit complex. They just want to see a return on their investment. So was that a difficult conversation to have with your investors?
No, not at all. In fact, as you know, a lot of times your buyers end up becoming your investors, because even though you're selling a turnkey product, and I hope I sell a great turnkey product, people still at the end of the day have a property that they have to manage, or they have a management company that they have to manage. And it's not true passive income. And everything's got a life cycle, as you know. And so a lot of my buyers have become my lenders. And a lot of the lenders that lend to my single family have no problem, as you mentioned, coming in as equity on the bigger deals or financing the smaller multifamily.
I love that.
They have faith in me. I go through probably $15 million a year between these 2 companies. And so these people have done a lot of transactions with me, and they trust me. As you know, that's the basis for all of it. your
For sure.
experience.
They respect what you've done, and they trust you because they've already done business with you. And if you have trust and respect, you can raise money and partner up with people, and they'll be lining up to give you money because,
there's a lot of money out there. People want to use it. So they want to partner with people that can use it and use it consistently and not have it sitting idle. So
yeah. And a lot of turnkey buyers, like you said, they buy something and think it's mailbox money where they're going to get $600 a month in cash flow, another 600. And then all of a sudden, something breaks and they make 400, and then all of a sudden the tenant moves out and they make zero money for about 6 months because they have to pay money to an attorney and court costs in order to evict the tenant. And then they have to wait another month in order for them to get kicked out. And then they have to go and spend $5,000 in order to turn the unit over. And then they have to pay a leasing commission to the leasing agent to rent it back out. And now 5-6 months down the road, finally it's occupied. Not only do they not make the $600 every single month that they were hoping for, but then they outlaid another, $7,000, $8,000. And when they're looking for a 8% return, 9%, 10% return on their investment, and then you can take that same thing and say, hey, listen, why don't you just lend me the money? I'll pay you the 8% return that you're looking for anyways, and maybe even kick them a little bit of equity in the deal or however you structure it. All of a sudden, it gives them the predictable return that they were hoping for, and the ability for equity upside, appreciation, and making some money as the market continues to power on. So I found that from a standpoint of raising private money, turnkey buyers are an amazing group of people to just kind of help have that conversation and pivot them into investing with you on apartment buildings and commercial properties too.
Yeah, it's a great way to make them a part of it. Most of them, as I've found, that have been investors for a while, they want to move into that space anyway. They just don't know how.
Mm-hmm.
Too expensive in their markets.
Mm-hmm.
It's exciting for them to partner with somebody in the multifamily space.
Love it. So before we dive more into apartments, let's go back to what are you working on right now to automate your current turnkey business? Like, what are the hurdles you're facing? What are a couple of those things that you're like, I really need to put 1, 2, and 3 in place in order for me to be able to focus a little bit more time over here. And that way I could just be more like a board of advisors, right? Or a director, CEO, and really come in once, twice a week on the transactional side to make sure things are, moving forward as they're supposed to be moving forward, continuing to grow as we want them to grow. But really, you can spend bulk of your time building your own portfolio.
Yeah. Well, one of the biggest moves that I made when I decided I was going to move into commercial investing is I brought in more or less a partner. He's not a partner in my business, but he's a joint venture partner. Mm-hmm. So I kind of abandoned the whole leveraging through general contractors, because even that, I was managing a project manager who was then managing the general contractors, and it was just the whole
multiple layers. Yeah.
Multiple layers. So I ended up going into a joint venture with someone who runs all of my construction, incentivizing him to try and go direct to the manufacturer to get materials for less, to hire the right type of people and manage the right type of people, because obviously the profitability is ours to share. Mm-hmm. That's been amazing. And
you've incentivized him by saying, hey, we're going to share in the net profit, right? Correct. So now he's all about increasing the income and decreasing the expenses, because at the end of the day, he's getting paid based on net income. And so he's incentivized in that capacity, right?
Correct. Yeah, and it's been phenomenal. Unlike a lot of people that you find in construction, he actually has a business background, also as a broker, developer, and so he gets it. And he understands highest and best use. There's a lot of babysitting that does not occur anymore. So that's been wonderful. I'm happy to give up, by the way, half the profits, because things are being managed better as it is, and it's being automated. Actually, through your advice, we brought in somebody on the HR side to kind of take a look at our business as a whole and look at everyone's roles and responsibilities and help us create an org chart that made the most sense for these turnkey businesses. So that's happening here soon. Awesome. I think that analysis and the rollout of that is going to help, even more. And just like leveraging the people that I have now. Again, I took my hands off the wheel as far as acquisitions go. I trained my sales reps how to do that for me. Mm-hmm. I train them on the sales side, so they're handling both the acquisitions and the dispositions. They're happy to do it because they're making money doing it. Promoted my transaction coordinator, and she's handling more the ops side of stuff. And I don't know, I just feel like every day, implementing more systems and automating more has enabled me to put my focus on things that are going to put money in my pocket long-term first.
Do you think there's an ability to step out altogether? At what level is that possible? Is it possible ever? How much do you think you can automate this thing before all of a sudden it becomes too many processes and too many things where somebody still has to police it and all that kind of stuff?
It's a good question, Tim. I don't have the answer for that just yet. I can tell you that my time has been halved already.
That's great.
Just in the last probably 6 months, absolutely.
Yeah.
And I used to be buried by this.
I love the idea of bringing in a joint venture partner, right?
Yep.
It's somebody who's only compensated based on how well the property or the company performs. And it's not additional overhead, but it's a way that you can align with another A player who has a common goal, has a common vision, that can help drive that and really free up a ton of your time. So, versus you doing 100% of that work and keeping 100% of the money, but it's a smaller of a grape, right? Versus you giving up 50% of it, but you have 50% of a watermelon now because you're doing more deals. There's a lot more juice in 50% of a watermelon than in 100% of a grape. And so it allows you to go and spend time doing some other activities, building out more on the turnkey side, or working more on the business than in the business, and then working on building up some of your own investments, and building some of your own wealth too. So that's powerful stuff. What is the? Go ahead.
Oh, I'm sorry. I was just going to say, it's tough to take my focus fully off turnkey because it's such an amazing time to be in this space, right?
Mm-hmm.
And number one, we're in the Midwest. As you know, there's inventory that's not available in other areas of the country that's available here, and especially here in Cleveland. I have this amazing advantage in that I've got deal flow constantly. I've got, buyers constantly. My inventory is always sold out. And, not only does it produce real income for me right now while I'm building up this passive income side, but it's also feeding some of the operational costs on the multifamily side. So right now it's imperative, and it's really tough to completely let go of the turnkey side. I still believe in it.
Yeah. I mean, I don't think you should let go of it if it's generating revenue. I think there's ways that you could automate it and incentivize high caliber people to come in and run it for you. Maybe not even giving up equity. Maybe you just give up a percentage of profit share, right? You still own 100% of the company. Although at the end of the day, can you sell a turnkey company? Maybe. Depends on how well you have it automated and how well you have the processes in place, and do you need to be there or not need to be there. But so giving up equity versus profit share, or maybe having them vest into equity in the deal long term. There's a lot of different ways that you can do it to attract quality A players to you and to your business without having or while incentivizing them to work really hard and work like an owner in the business too. And so I think, especially with the amount of volume that you're doing, I mean, if you're doing 20 houses a month, I mean, that's a lot of revenue. It gives you a lot of options to then figure out, what's the best way to do this, and whether that's hiring an employee or bringing on a JV partner. I wouldn't shut that thing down. I know you don't intend to either. Right. Tell me about what the long-term vision is. I see a lot of people who say, hey, I want to get to there, or I want to get to a certain place, and but they don't have the roadmap. Like, how do I get there, right? And what I found is that they don't have the long-term vision in place, and they can't reverse engineer the path in order to get there. So what is your long-term vision over the course of the next, let's say 5 years? And what is your intent on automating your current turnkey business, and then focusing a little bit more money and a little bit more efforts on your passive investments? Like, what is your goal there?
Sure. So I may have mentioned that I have a second turnkey venture, and I have a partner in that. And I had kind of agreed to go in with him. We were basically basing that turnkey model off of my existing turnkey model. Obviously, I have a lot of experience, and it's been pretty successful. So we were kind of leveraging that. And I told him, we have to make a promise to one another, which is that for as much as we're investing in this turnkey business, and that's the one that focuses on those 2 to 4 family, that we will make multifamily investing, that is buying commercial apartments with one another. So I'm in a partnership on that. We're going to make that as big, if not bigger, a bigger priority than these turnkey operations. And so he agreed.
I love it.
Yeah, we have a pretty cool skill set. I should say, matching skill set. You know, I'm more on the acquisitions. Obviously, I have the local knowledge. My partner's out of Tampa. He's got a real estate finance background. So we've made a really good team. That goal keeps moving, right? You know, initially it was like, I just want to get started. You know, I want to get this 6 unit. Then we bought 3 buildings in one package. And then it was like, we wanted to get that fully stabilized and refinanced. And then the deals just started coming. And so right now we talk, you know, we want to be at 1,000 units, but that's happening. You know, the trajectory has been a lot faster than I thought it would be. Mm-hmm. So who knows what that will turn into by the middle of next year. We keep saying 1,000 units, but I think it won't even be a year from now that we'll be at 1,000 units.
Yeah, I love it. And I it's amazing how much this stuff snowballs, how much it compounds. And a lot of people, I've said this before in some mastermind events and that kind of stuff, but like you overestimate maybe what you can accomplish in 12 months. You know, 12 months is kind of a short period of time, but you grossly underestimate, everybody does, grossly underestimate what they can accomplish in 36 or 48 months. It is amazing that when you lay the foundation, even in 24, 36 months, like I've built my current portfolio in 4 years.
I know.
48 months, I have 3,200 units. Now I had an insight, right? Like just like you knew how to find deals, how to raise money, how to, structure these kinds of things before you got into apartments. So you had access to some resources and ability to do those kinds of things. So did I. But if you lay that initial foundation, all of a sudden, I picked up 80 units my first year. I was at about 260 units in year 2, right? And then all of a sudden, I was probably at about 400 units in year 2. 80 units, then about 400 units. And then I jumped up to 1,500 units, in year 3. And then in year 4, I've picked up another 1,700 units in a year. And so it literally is the quarter or like the penny doubling every single day, mm-hmm. So I can't even imagine, where you're going to be 12 months from now, 24 months from now, 36 months from now. And I think your goals are always kind of like a moving target, right? They're a living thing that as different opportunities present themselves, as different partnerships present themselves, as you realize, oh, wow, I've had some success and I need to be reaching higher, right? I need to set a higher goal and maybe miss that versus setting too low of a goal and hit it and not knowing what I'm capable of. That's an exciting place to be in.
Yeah, it is. I have such a passion for this stuff, I mean, I truly love it. And I definitely think that the commercial apartments, like it's just reinvigorated me. Mm-hmm. And so, I think that target's going to be moving. Like I said, he and I both said 1,000 units, but as things are motoring on and all these opportunities are coming toward us, we're like, we better move that mark. We'll probably have to move it by next year.
I love it. Yeah. I mean, there's no doubt in my mind you'll be at 1,200, 1,500 units by the end of next year. If you'll be at 500 this year, you'll definitely at least double, probably more than triple it by end of next year. And what's really cool is it parallels very well with what you're already doing. You're already doing direct mail to different non-owner occupied properties. And a lot of times if they own a single family, many times they own a 10-unit building or they own a 48-unit building or something along those lines. And then so it parallels very well already. And then secondly, you already have construction crews going. Doesn't matter if they're renovating a single family home with luxury vinyl tile and white cabinets and gray walls and oil rub bronze or brushed nickel fixtures. They're going to do the same thing in 20 one-bedroom apartment units, right? So you're able to pivot and utilize a lot of and your buyers, instead of buying property, they can invest with you on the apartment side as well and start doing more deals that way and still meet their goals and their long-term objectives of having residual income, passive income, predictable returns on their investment. And so it's a way that you can still service and work with all the people you're currently working with, just by adding a couple zeros, by doing a little bit more together and, rising tide floats all boats kind of thing. So it's really exciting. It's exciting to see. It's exciting to, forecast out and think about where it could be in the future as well. So good stuff, Kelly. So I want to close. I want to make sure everybody can connect with you. What's the best way to connect with you if they're looking to buy turnkey or want to connect with you on scaling into apartments and whatever that looks like? How can people match up with you?
Yeah, so if you're interested in turnkey investing, you can reach out to us on prospercleveland.com or limitlessturnkey.com. You can register on either site, see available inventory, and be added to our mailing list. If you're interested in management services here in the Cleveland market, Cleveland or Akron, reach out to rentfromkw.com. And if you want to reach me directly, you can reach me at Kelly, it's Kelly, at prospercleveland.com.
Awesome. And so, Kelly, I always end with one question. This is the Legacy Wealth Show. And what I'd like to know is, like, what does legacy mean to you, right? Is it passing down money for future generations? And is it passing down mindset? Is it making an impact on the community? Or like, what is legacy from your viewpoint? How would you define that?
Yeah, I've been thinking a lot about that lately. I guess it's part of getting older, you know? It made me reflect on something actually you said in the last Commercial Empire event and on this panel, and I'm sure I'm gonna torture this, but somebody asked you, they were like, how did you get to where you are from where you were in like such a short period of time? And I don't know if you remember this, but you started talking about like you recognized your worthiness. Do you remember saying that? Mm-hmm. That was really like a gut punch to me, you know? So I think obviously the legacy stuff, it starts while we're here. You know, worthiness is our birthright. So it's recognizing that, and it's not being afraid of our own excellence, right? And it's just becoming the best version of ourselves that we possibly can be in whatever realm that is, right? Be your best. I mean, it's financially, it's mentally, it's relationally, it's spiritually, it's in all those things, right? And then to me, the legacy piece is when you realize that, then you reach your hand back and you pull the other people forward and you show them their worthiness and you show them their capabilities and you model for them what they may not understand at that moment. Clearly, like with me being a mom, the people that I hope to model the most for my children. So I hope that they see me trying to be the best version of myself. And then ultimately, I hope I can do it for other people. To me, that's what legacy is.
100% agree. I love that. Well, awesome. Kelly, thank you for so much for all the value, all the content, all the insight that you shared. And guys, if anybody, has questions for Kelly or wants to connect with Kelly, wants to work with Kelly, please connect with her. She's an amazing person right here out of the Cleveland markets. You got to be a good person. Well, I mean, there's a lot of bad people in Cleveland. So be careful, but I promise you, I align myself with only the best. And Kelly's amazing. And Kelly, again, I appreciate you, appreciate our friendship and our business partnership and relationship. And excited to see where the next 18 months brings you.
Thanks, Tim. I appreciate it. Thanks for having me on.
Thank you, guys.